So big transition at the Federal Reserve last week with Chairman Warsh taking over for Chair Powell. Much anticipated, and frankly, the press conference didn't disappoint. So obviously, he's very comfortable in that room. It's not new to the Fed itself, and many of the members of the media had known him from his prior stints, and now obviously had a rapport there, which was fun to see. I mean, at the end of the day, it appears as though those are the kind of interchanges where we as investors are going to get information, and so it's really nice if that room has a collegiality to it that allows us to do that. So one big theme there was task force. In fact, Chair Warsh used that phrase so many times for the things that he wanted to research and consider how the Fed does business that he began to joke and laugh as he gave the same answer over and over again to questions from reporters later in the press conference. So we should see the results of those towards the end of the year. That was his expectation. So it'll be very interesting to see what changes, what's the basis for that, and we would expect it to be well researched. So genuinely are interested to see what that looks like. One other big change was communication strategy, and this was not something that should have been a surprise. It's something he's been a fan of for a long time, certainly was transparent about in the lead up to as well as the confirmation hearing. And we saw that in play here in really two primary areas. One, the statement itself, considerably shorter. 130 words. The last statement we received from the FOMC, 341 words. So entire sections were gone. You can go on Bloomberg after these meetings and do strike through and side-by-side comparisons, and it was hard to see, not to see that is how different the statements were and the approach was there. We also saw that, and this was the meeting that they were to release their summary of economic projections, the SEP. There's one notable absentee from that, and it was Chair Warsh, and he admitted it. He said, I don't think it's helpful for me to give this forecast right now with as many things changing with our dual mandate, and almost intimated that he expected that to maybe by the end of the year, the other members see the same thing. So he didn't say it, but it seemed like he was leaning towards, we may not keep doing this much into the future. So that will be very interesting to watch. What did actually happen at the meeting itself? So a 12-0 vote, so unanimous vote for the first time in over a year to not make a change. What did change was a big shift in rate expectations from the members. So of those that everyone else, that is, that filled that out, half expected rates to go up this year, whereas half expected at the margin for rates to be neutral. Last meeting, it was neutral to easing. So big shift up in what people expected and how that will come to play. And that really came through in the press conference itself, too. It was considerably more hawkish on the inflation side than really anyone expected. And rates responded that way. So a big jump in the 2-year on Wednesday itself. And that really leads to our chart here that we'll show you. So this is in thanks to BCA Research for pointing us to this idea. But if we take a look at the 2-year and the Fed funds rate, this is the last 40 years. We could certainly go back further. But it gives you a good sense. Obviously, a pretty tight relationship, which makes sense. But the thing to look for is when that 2-year rate is below Fed funds and then shoots above it. The periods where we see that historically have been before the Fed begins to raise rates again. So that happened earlier this year, has continued to extend as we've had the current conversation that we have going on here. And as of last Friday, that gap was a little over 40 basis points. So interestingly, that also jives pretty well with Fed funds futures, which actually show almost the same amount in rate increases throughout the balance of this year, with one full hike by September and almost another full one by December. So markets are really trying to figure out what this means. And that's really what Chair Warsh said. It's we want to lead the markets and that they're very smart and efficient in interpreting the data and not have us muddy the water when our interpretation of this could change, day to day, week to week, certainly between each meeting. So that's going to be their strategy. What will it lead to? Probably more volatility, maybe around economic reports until markets figure out, which direction the Fed is headed. We get a hot inflation print later this week. You could probably see short rates shoot up a little bit more. If it's a little bit more as expected, maybe things settle in and don't change materially. So that's what we'll be watching for. We'll see how efficient the market is at digesting information and where the Fed seems and chooses to share their thoughts and where they don't. We'll all learn that together, and we'll certainly share our thoughts when we have them. Thanks for stopping by.